Oftentimes, we're so consumed with infinite banking and creating passive income that we often overlook one of the most beneficial aspects of using whole life insurance. Stick around today as we bring that to the forefront.
Enjoy the episode.
If you're an investor or want to be an investor and you're looking to create passive income that exceeds your monthly expenses, then this is the podcast for you. Here on the Infinite Wealth Podcast, we combine the philosophies of Robert Kiyosaki's Rich Dad Poor Dad along with Nelson Nash's infinite banking concept. Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen along with our co-host Anthony Faso. And today we're going to be talking about one of the most often overlooked aspects of using whole life insurance, and that is
the death benefit.
Drum roll.
And the living benefit.
Great. Oftentimes, guys, we're so consumed with infinite banking, passive income that this isn't even on our radar. We're absolutely guilty of this. And I would say that here in the last week or so, the living benefits and the death benefits has been brought to the forefront just because of client circumstances. And so that's really where this podcast is coming from. And so we wanted to bring this to you guys and just share some of the stuff that we're having conversations with clients.
Yeah, I oftentimes we say, the death benefit is just icing on the cake.
Yeah.
Well, let me tell you, that icing can be very filling. Like there's a lot of aspects to it. Yeah, you like that one?
That was good.
Yeah, okay. Yeah,
wow.
It just came to me.
Yeah.
A lot of times we downplay it, but however, that something like that could happen. An early death could happen and it could affect the family. And oftentimes I think we don't put enough pressure on it. So you're going to share some stories that had happened. And then also there's some living benefits. There's other ways that we can use a death benefit while we're living. So we're going to discuss that as well. Cam, I know you got an interesting phone call or two this week. You want to share that story?
Yeah, absolutely. So again, that's where this conversation is coming from. As I was preparing kind of this podcast and the notes for it, one of the things that I wrote down was that death benefit provides protection for loved ones, long-term security, and peace of mind. And the first phone call that I had really relates to the death benefit providing protection for loved ones. Mm-hmm. I met with a client. This was early last week, and this gentleman's been a client for maybe a couple years now. Mm-hmm. But he called me and he had some rough news, right? I could tell he was a little emotional when we started talking. But he told me that back in December, he went in for some blood work, came back, everything was great, passed with flying colors. He's in excellent health, takes care of himself. And then towards the end of December, he had a lymph node that started to become inflamed. He kind of kept pushing it off. And his wife, of course, the smart one of the couple, right, recommended and urged him to go see the doctor. Anyways, he goes, sees the doctor. They run a bunch of tests. And the doctor came back with kind of a preliminary diagnosis of cancer, right? And so he said, hey, I believe it's this. We need to go find out exactly what's happening. And so he's meeting with an oncologist and he's going through that process. But man, we talked after that initial consultation with his doctor. And I'll tell you what, man, his focus absolutely shifted from cash value and accumulation to making sure that he's got enough death benefit to be providing for his wife and kids and making sure that they're taken care of. Honestly, I'm really proud to say that we have just shy of about $4 million of death benefit in place on this man. And, it was great to kind of have that and let him know that he's got that in place for his family. So, right, when you get that phone call or you get that diagnosis, you really shift focus pretty quickly to that death benefit.
Yeah, it doesn't really hit home. Like we're talking in theory, but then just like you said, when you get that phone call or that doctor says that word, your life changes.
Yeah.
Our priorities change. And, how thankful it is that I'm sure you probably, like a lot of our clients, is there any way we can lower that death benefit? Or, I really don't need it, but you don't need it until you need it. And this was one of a few examples. I know you're going to share a couple others with us as well.
Absolutely. Right. And again, I had another phone call. And what I would say is this one kind of relates to the second point that I made, is that death benefit provides long-term security. Had a phone call conversation, Zoom meeting with another gentleman, and we got on the call and started talking. And we had put into place a plan for him. I don't even think it's been a year ago, to be honest. And since we put that policy in place, he's had some pretty serious health complications that have came up that dealing with his heart. And so he spent a large majority of this year getting that addressed and trying to find out what the root cause of that is. I don't believe he still knows what the cause of it is, but he's on some medication to get that under control. And so, again, you look at having that plan in place and having just shy of $1 million of death benefit in place for him. I mean, you look at the long-term security that that's able to provide for him, for just knowing that, hey, he's got coverage now in place. Because if he would approach an insurance company after having some of these medical issues, there's not a chance that they would underwrite him. So great to have that death benefit in place for him.
You know, Cam, I know, is that the same individual who had used a lot of their policy to pay for some of the medical care?
That was, yeah. That
you
was
want to expand? I mean, because I think that's another attribute, you know, of having access to that capital. You mind expanding?
Not at all, right? Speaking generally, right, is he had some issues that came up, health issues, and so they were using the cash value to address a lot of those diagnoses, right? They're trying to figure out exactly what was happening, and so he was going to other doctors, running tests and everything else, and then a lot of that was paid out of pocket, really high dollar amount that he had actually ended up paying over the course of the last year. So, you know, he was blessed and fortunate and happy that it was there. The cash value was there to use for that, but also that death benefit is there moving forward.
And this, I know we do pile on a lot on what I call them government created plans, these IRAs or 401ks, where most people are holding their wealth.
Yeah.
But when you need that money, you know, like if you would have had all of that money in a 401k or IRA, well, first of all, he may not be able to have all the access to it if it was a 401k, because you could only pull out a loan of 50 grand. And he obviously needed more than that. But let's say it was an IRA, or he was able to pull more out. He's going to pay taxes and a penalty. It's one of the many reasons why it's important that we need to have some money that is liquid, that we have access to when stuff like this does happen.
Yeah. And the third example that I pulled from this week was really that death benefit provides peace of mind. Oftentimes you'll get one spouse that is handling all the investments and the other spouse handles, you know, life, right, or other things. And so for the spouse that's not involved, right, it can be very confusing and overwhelming if or when the time comes that they need to step into that role to take over some of that responsibility. And so death benefit is there really to simplify life for them. It's there to provide peace of mind for the beneficiaries. One of the conversations that I had this week was an excellent example of it. I was meeting with a couple that was, husband was 65, 66, and the wife was 61, and he's handled all of the investments for their relationship, right? And so one of the comments that she made was that as we're reviewing some of these funding options, is she said, Cameron, she's like, you know, to be totally honest with you, I don't understand a lot of the investments that he's making, but she did say, I do understand life insurance, right? I understand that we've got cash value in there, and that God forbid something were to happen to him, there's a death benefit that's going to come in there that is going to provide me peace of mind while I kind of sift through some of these accounts and stuff that she's going to have to manage and oversee. And so I thought that was very insightful on her part, and I thought it was a great point because you see that a lot, right? Oftentimes one spouse is kind of leading the charge on the investments, and there's a lot of stuff that you're overseeing and kind of juggling there, and one spouse isn't always included. So I thought it was a great point.
That is great. Thanks for sharing, Cameron. And it shows the importance of death benefit. And if you're listening and maybe you're not ready to do infinite banking, you probably have a need for death benefit. So we could gladly help you with that and get some term from your work or from wherever. But we do think it's important that you do have some death benefit. And term insurance, for the most part, is not that expensive, particularly if you are young and healthy. You can lock in those cheap rates for a long period of time.
Along with the death benefit that's often overlooked is another aspect of the death benefit is some living benefits that are often even more so overlooked, Anthony. If you could, maybe let our listeners know a little bit more about living benefits, and then we'll give you guys our honest opinion on some of this stuff.
So what had happened a while back is the IRS or Congress allowed the ability to use some of the death benefit while you're living under certain circumstances. And so I tell you, I remember when this first came out, I was super excited. But then one of my questions is, well, how much does this rider cost? And they're like, oh, it's included. There is no cost. To me, the skeptic in me, I do believe you get what you pay for, right? So if something was, say, free or is included, it may not be as valuable as maybe that you would think. And so what we're talking about is a chronic illness rider. And insurance companies may call it something different, but really, I should step back. There's really both. There's a terminal illness rider or a chronic illness rider. They're both, in essence, an advance of your death benefit. Now, I'd say the terminal illness rider, that is if you're terminally ill, meaning that you have a life expectancy of 12 months or less, the insurance company will give you an advance of the death benefit. And the perfect ideal story would be is you get diagnosed with a rare disease that your doctor can't cure. You take this death benefit and you get treatment that maybe insurance wouldn't provide, and you're healed, right? That is like the Cinderella story. Okay. Odds are that may not happen, but what that will allow you to do is to take some of that death benefit and get some of the care that you need, and maybe some of it's comfort care, right? Or maybe we're going to knock out some items on the bucket list, or we're going to take our kids or grandkids to do something where you have that ability to be there and to be able to see that. Now, then the other form of this advanced death benefit is called that chronic illness rider. And this typically kicks in if you, with it for 90 days, you're unable to perform 2 of the 6 daily activities. Now, those include transferring, like getting in and out of bed, being able to dress yourself, feed yourself, bathe yourself, being able to lift yourself from the toilet. And then the last one is severe cognitive impairment. So these are a little more harder to qualify, but the bottom line is, I'm not going to say the bottom line is the bottom line. Okay. But I was tempted to.
I was waiting. Thanks for waking me up though. Yeah.
If we kind of peel back and kind of look at what these are, it is in essence a loan against your death benefit. Now, as if you're listening to this podcast, you're full aware that we are able to loan against the cash value. Okay. But, if the way policies are designed, that difference between the cash value and the death benefit is going to start off at a pretty wide gap, particularly the younger you are, the more death benefit that dollar is going to be. So that gap is large. As we get older, that gap is going to get smaller and smaller. Oftentimes when something like a chronic illness is going to occur, it's typically projected, age 75 or later. And if you were to look at an illustration, that gap gets real small. And so you're already able to borrow against the loan, the cash value, with no need to meet any criteria of these of not having to do these daily activities. So the real benefit is just that gap. And again, as we get older, that gap is small. Thus, the benefit or the advantage of these riders are small. Now, if something were to happen when you're younger, in 20s, 30s, or 40s, it's possible to have a stroke or be diagnosed with MS or some other severe disease where that can create a lot of value. But and I think what the point we're trying to make is that sometimes, and oftentimes by some agents, this is sold as a ability to pay for your long-term care expenses. We rarely touch on that. In part, that's not why we're doing infinite banking. We don't want to be distracted of all the many benefits of whole life. We're just trying to stay focused on the core reasonings. But also, we don't want you to have, I don't think that's much of a safety net. If we are worried about how we're going to pay for these long-term care expenses, there's better solutions than these free riders. You know, about a month or two before, we had an interview where we talked about some options for a whole life policy that is specially designed to pay for long-term care. So if you're worried to have those concerns about long-term care, we need a product that's designed to solve that problem. IBC policy, even though it says in the literature it can help pay for that typically, again, that gap is going to be small. But if we're being realistic, most people are anticipating using that cash value as part of their cash flow in retirement. Thus, there may not be enough there, or that may hinder the cash flow that you need for retirement.
Great point, Anthony. Right. So if I could summarize kind of what was right, there's living benefits that are associated with that, that come along with the death benefit that's based upon it. And as you get older, those benefits are minimizing, right? So it's nice to have access to it, but again, oftentimes I think that sometimes it can be inflated as far as the use or the benefit of it. So if you guys have questions and you have a policy and you're not exactly sure how to calculate that, or if you'd like to, feel free to reach out to us. Happy to go through that with you and make sure you fully understand what's available to you. And if there is a gap, how we can solve that for you. So great point. Anthony, right? One of the things that we were talking about when we were organizing this conversation was retirement, long-term care needs, right? How do we prioritize this? I think you had organized kind of a piece there that you want to share, right?
We call it the 4 L's of retirement. And what we need to look at when we're retirement, the first priority needs to be for lifestyle. Do we have enough money to pay for your medical bills, to pay for your housing, to spoil the grandkids, to live the life that you want to live? Then we want to look at liquidity. Life is going to happen. There's going to be some emergencies, and we need to have access to some money to provide for those. And then the third, that's where we look at long-term care. How are we going to solve that problem? And we can't be naive and say, oh, that's not going to happen to me. It's going to happen to somebody else. Hopefully you're right, but what if you're not? We need to at least address that plan. And then finally, the fourth is going to be legacy. And the key thing is we believe that these need to be met in order, meaning if we don't have enough cash flow to pay for your retirement, we're not going to talk about taking care of the kids and the grandkids or the long-term care. We need to take care of you guys first. Then that will allow you to be in a position to take care of others. Great.
All right, guys. Today, what we talked about, again, were some of the often overlooked aspects of whole life insurance. Main one being that death benefit, right? Unfortunately, we've been presented with some client circumstances where they may be looking at using that benefit sooner than later. And so we just thought we'd share this message with you to put a little priority on that for you. And if you want somebody to review that, feel free to reach out to us. Secondarily, that death benefit is also driving some of those living benefits. Again, I think oftentimes it's overstated as far as the true benefit of that. Again, if you guys have questions, feel free to reach out to us. And then Anthony did a real good job of kind of summarizing an approach I know. We're late in the podcast. I doubt anybody's listening, right? So, all right. So Anthony did a real good job of just kind of prioritizing the way that we should be approaching some of these circumstances in life. So again, really hope that you guys enjoyed this podcast and found some value in it.
Go make it a fantastic day.
Take care.
If you like this video, I know you're like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.